Hello and welcome out to another Insights. Going to do a very brief market update here, mainly because there's not a whole lot as far as the market goes to report. It's going to be interesting, but I thought this was a good quote. Now is the only time there is, and I love that. I think it's important to plan for the future, but also it is being present and living in the now sometimes can be challenging, but at the same time, I think it's important. So let's step back and look at the big picture and enjoy what we have right now, because there's no guarantee of tomorrow, right? We never know what's going to happen. So with that, let's look at economic news for over the next week. We got the 18th Philly Fed initial jobless claims. Oh yeah, that's just a weekly. Okay. I'm thinking, wait a minute, it's the middle of the month. Am I losing my mind? The answer to that is yes. Actually, the answer is no. I've already lost it. FOMC, core CPI. Yeah, a lot of these haven't been huge market movers anyway. So until the market really gets crazy, I don't think it's going to matter much. Consumer confidence on the 23rd, which is next Tuesday. Existing home sales. No, what is this? I love Windows. Yeah. So existing home sales, obviously that can affect the home sector. So if you're in trades that are in that particular sector, then obviously you want to be aware of those existing home sales. So we got home sales coming out next week. Housing prices index. A lot of these are really small now. There's so many different economic data points that are kept now. It's almost too hard to keep track of them all. That's why I don't pay attention to a lot of them anymore. I used to just just the big ones that are key. So with that, briefly go through the markets. I mean, excuse me. What do you say about the SPX? I mean, the last 3 days it's rallied big time. It bounced there at that 1815 area. Same thing it did a month ago, and it's rallied. You know, three big up days, but very light volume, relatively speaking. So today seemed to be a little more solid, a little more consistent, steady buying, where the last couple of days seemed more like short covering. So it'll be interesting to see if this continues. It's not likely. You know, we're most likely going to drop off tomorrow. Maybe at some point we'll probably drop off a decent amount, because even just look at this. I mean, just the amount of chart that we can see here. How many periods are there where you have 3 days in a row that are up, and then the next day is up too? I mean, there's 3 days up. There's 3 days up, but those are three little days. We've got three big days. We could gap up in the morning and then drop off. Here's one when we got a doji, then one small doji day. We had a big pullback the next day, and then it closed up a little bit higher. The next day it dropped off, and then it rallied. So I mean, that's not really the same, but it's similar. It's close. So it's hard to say what we're going to have. I mean, it's a 50-50 shot, but odds are, even though it's always 50-50, we know that the odds are that we're going to have a little pullback tomorrow. So we'll see. The rest of the markets all look very similar. NASDAQ, you can see everything's just gapping. Dow, transport. Transports are actually, wow, breaking out to a high. I hadn't looked at those. Russell's still not. Russell's still struggling. And the volume's even lighter on the Russell. Look at that. So this is an indication, and we've talked about this for a long time, that the Russell is an indication of kind of the overall economy, because it's all the small cap stocks. And if small business isn't doing well, generally speaking, nobody's doing well, because small businesses feed the big businesses. So even if the big businesses might be doing well, which some are, you know, there's pockets of them, but if they're not doing well, then small guys usually aren't. And the fact that the Russell has been as bearish as it has is an indication that this economy is not that strong. So, and then the VIX, of course, dropping back off, no surprise. But interestingly enough, notice how it seems to be trending higher. It's not, and this is where I think, you know what, I'm going to go back and look at, oh 08, how do we get back there, 08. There we go. Look at what we have here, and this is where I haven't, it started to get interesting, and this is where occasionally the VIX can come in handy. You look at 06. 04, 05, 06, the market was humming along. Everything was bullish. Everybody was comfy. We're bouncing from between 12 and 17 essentially on the VIX. 07 hits, late 07, and what happens? We get the big spike in volatility. It runs up. Excuse me. And then what happens to it for the next year or so? It stays up in this range. It stayed above that 17, bounced between 17 and 30. That was almost, wow, I haven't noticed this, and I'm just seeing it now. That was almost a predictor. Let's go back and see if 2001 is the same. Kind of. But that excuse me, this cough is just bugging me. That was that little channel there where it stayed above 17, it bounced between 17 and 25 and 30. It did that for 7 all the way up to for about a year. It bounced in that higher range for about a year before the crash of 08. So it's almost as if the market was planning for it. It's almost as if they knew that something was coming, so they spiked. The volatility was higher than normal. It got kind of crazy, and that's about the time that Head & Shoulders was building. And what do we have going on right now? We are starting to, it looks like we're in the beginnings of kind of having a higher range, that range between 17 and 25 or 30, somewhere in there. We've also, in the short term, we've got this little bit of an uptrend. So the VIX could be telling us something here. If we go back to 2000, 96, 97, interestingly enough, it spiked up there in late 96. That was a whole 4 years, though, but that was an extremely volatile time, though, too. And it continued right up through 2001. So not quite, I think the 2000 crash was not nearly as significant as the 07, 08. And we can tell that we could really tell that by the VIX. I mean, the VIX went, in 2000 when it crashed, we went from, well, there's September 11th, 22, we only spiked up to 42. Crash of 08, we went to 85. Actually, I think it was 90 or something. Yeah. This is a weekly, so intra-week basis, we went all the way to 90. Twice as high. So the panic was twice as big in 08 than it was in 2001. And it looks almost like we're setting up for another one of those. I mean, there's a lot of evidence pointing to it. So, and we've talked about that a lot here. The trifecta of you got the baby boomers, and then you got the Gen X that remember the 07, 08 crash that don't want to go through it again. The baby boomers are going to have to get their money out eventually, and they can't stay in forever. So, just lots of stuff. I don't know what this is. It's making me mad. So, anyway, interesting. It's one reason I love doing this, because just looking through things, all of a sudden, oh, look at this. Interesting that the VIX looks to be cluing us into what may be coming next. So we'll see. We'll see what it brings. So that is it for the market update. You all have a great night. We'll see you soon. Bye-bye.